Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar still remains somewhat in a negative bias, even though the technicals have not supported this, but the candles have. With a long-legged doji in place, we got a rejection from that second attempt at 75, 25, 35 area and nearly posted an outside range day, but not quite there. However, the market still looks destined towards that 74.30 challenge at present, and therefore let's see how the market rolls into this week as all eyes look to one of the main key drivers, which is the non-farm payrolls number, which is out this Friday. Viewing the euro, the market is still somewhat negative, even as the dollar index, which measures the greenback strength against a basket of 6 major currencies, holds around 99.20. Although we can see an attempt here with the RSI as it looks back towards that midway point, with the heavy candles, nearly all negative by one. The fact is that the market looks down towards 109.30. A break beneath there will give further exposure down towards 107.50.85. But I think that call is a little bit too premature at this stage and therefore could look, first of all, 109.30, and let's see how the market reacts to that level. The dollar yen, after hitting the highs around 125, which were around 7-year highs, the market is rejected from there and now puts a slightly negative tone into the day's session. If we continue in this pattern, then we could see a down test to 122 or even down to the 121 region and reassess from there. I would like to see this ADX buckle a little bit more, but the RSI has, so let's keep an eye on that. Sterling still remains in a negative bias, but still towards that 130.70 or down towards 130. I feel the market will stage a recovery. I'm not overly negative because the MACD hasn't quite broken down and therefore could see a snap to the upside, and this view from the lower side of the range back to 133. And talking of snap into the upside, well, sterling Kiwi looks like is in a prime position to snap if we break through the 190 area, and therefore could see a rise up towards 192 as a preferred target. Looking at gold, the market's still negative. After taking out 1,924.26, the market is looking further to the downside and possibly towards this level of 1,900 and reassess from there. Viewing from the technicals, we are very much in a negative sentiment, and let's see how the market plays into the European session. Finishing up with oil, the market reached its 103 target. As you can see, there is little to support this market if it takes out 103 until 92.5. With the technicals heavy, could exactly see that. So let's keep an eye on that. Break if we do see it, and therefore tumble further towards that region, as I mentioned, 92.5. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day.